Hello my fellow investment gurus and welcome back to the channel. Now today's topic is, can you beat Bitcoin? And well, as you might recall, a few weeks ago we made a video here that was called Crypto, Is It Really Worth It? And in that video I took a look at if we could get the same kind of return just investing in, for instance, Nasdaq, an ETF from Nasdaq, and then using some leverage. And it turned out that we could almost get the same return as just buying Bitcoins. Just by using some leverage and putting the money into Nasdaq, we would get the exact same risk profile, a little less performance, but on the other hand, we were owning a ton of good solid stocks. Now, by the way, just staying here at the Invest Like a Guru channel, this number 323, that is way too low. So please remember to subscribe to the channel and tell all your friends about it if you think this is worth sharing. Now, in today's video, I am gonna have a look at if we can construct a trading system that can actually be better than just owning Bitcoins. And yes, I know, and I got a lot of comments about that last time, there are a ton of reasons for owning Bitcoins outside just beating the market. It could be something about distrust in the fiat currency market, it could be decentralized financing and so on. So here we are only looking at performance compared to risk. Now, as you also might know, I'm pretty sure if you're watching this video, Bitcoin is kind of a volatile beast to invest in. And I should say I'm just choosing Bitcoin here. It is one of the oldest, one of the best known, but this could basically be several of the oldest cryptos we're talking about here. We have chosen to test from the beginning of 2017. Now we could have gone further back. There was some big rises here, some big drops here, but we had to start somewhere, and we chose 2017 because we are getting some big bull market, some bear market, some ups, some downs, some sideways here. So I think this is a pretty fair time frame to test this strategy on. And also we should say that now when comparing to Bitcoin, this of course would take that you have guessed or figured out somehow in the beginning of 2017 that it was Bitcoin you should put all your money in and then just keeping it. Now it did quite well for a while, and if you had bought here, you were in for a long painful time span here, and then it went up and then it went sideways. So you have to be a buy and holder, and also to guess which of the cryptos is the right. So we are trying to construct a trading strategy today that is beating Bitcoin, and let's see if it can be done. Now, first of all, the rules for this trading strategy is very simple. Now, here are the rules for the trading strategy. It is a very simple strategy. It can easily be refined, and we are working on that with our system, but this was just to try and put some of the same momentum rules into crypto trading as we do on our normal stock momentum strategies. So first of all, we were taking a huge universe of cryptocurrencies. I must admit that starting out on this little testing endeavor in the crypto space, I was not even aware that there were 2,200 different cryptocurrencies, and here we are not even counting the ones that have failed since the beginning. I should say that now we are taking the 2,200 cryptocurrencies here. Some of them are extremely small and therefore very illiquid. There are also a bit survivorship bias here, since we are not testing on the crypto strategies that have failed and went out of business. But I think this is a fairly okay test actually. We are taking the 2,200 cryptocurrencies. We are calculating 1 month, 6 month and 12 month momentum, meaning basically just how much have they gone up or down over the last 1 month, 6 month and 12 month. Then we are putting it in, we are weighing it at 1/3 to each of these and saying which of these cryptocurrencies have done the best, both looking at 1, 6 and 12 month, all combined, and then we are choosing the 30 best performing cryptos over these 3 time spans into one pool. And then we are investing them and hold them for a month and do it all over in a month. And I should say right away, we have not taken into account any trading costs here. And that is, of course, I know with many cryptos, there is a large spread when trading. So this is only to keep it on a statistical, theoretical leveling field here. So we will try and see if we can actually beat the Bitcoin. Now, we also have a strategy where we do it once per month, but of course that will add 4 times the trading cost to it, so that is even more theoretical. But let's have a look at how the results turned out. Now, first of all, this is the chart that we should compare with. This is a Bitcoin back from 2017. You can see it had a CAGR of 99.09%, meaning that it had to go up on average around 99% per year to reach this fantastic number here of 3,668.68% over 5 years. All right. Now here we are seeing a Sharpe ratio of 1.27. As you might know if you've seen our other videos, this is basically the CAGR divided by the volatility. There's a bit more to it than that, but we are basically taking the performance and dividing it by the volatility we have to endure. Now this gives us the Sharpe ratio. The Sortino ratio is a bit of the same, but here you're taking the CAGR and only comparing it to what is called the upside volatility, meaning the swings upwards, since we don't really mind upswings. So this is a Sortino ratio. This is usually a bit higher, and it is actually a ratio that I look at to a bit more often than the Sharpe ratio. We're looking at the max drawdown at 83%, which is some bad drawdown, and some high volatility of 77%. Now these are this is a benchmark. This is the base numbers we should compare with. So let's have a look at the first strategy that reallocates once per month. Now, as you can see here, let me just try to minimize this a bit. As you can see here, the blue line is our strategy and the gray line is Bitcoin. We have the Bitcoin numbers out here, as you can tell here, 99%, 1.27% and so on, as I showed you just before. And then we have the strategy here that has a CAGR of, you could say, only 68.55%. So what we can see here is that just in pure numbers, in absolute numbers, this strategy is not beating Bitcoin. However, there are some add-ons here, because first of all, as I said, we are not adding or subtracting, I should say, the trading costs. Of course, just buying and holding Bitcoins won't add any trading costs, but here there will be quite a lot. On the other hand, we are into 30 cryptos all the way, meaning that we are a lot more diversified, and that can actually be seen here on the blue line. This is a lot less jagged and whipsawed, and it is actually quite a lot nicer of an equity line. I know that just looking at the pure numbers, you would prefer this one, absolutely yes, but sitting in 2017, not knowing if Bitcoin would be a hit, and choosing between just buying and holding Bitcoin, or having a momentum strategy where you were constantly into the 30 best performing cryptocurrencies, I would probably have chosen the diversified one. It is a bit like looking at the stock market today and looking at one stock and saying, I am convinced this will have gone up 20-30 fold in 5 years. So I can just buy one stock now, or I can choose a diversified portfolio with 30 stocks from the same momentum strategy. I would personally absolutely choose the diversified strategy. We can see it on the numbers here. First of all, the Sharpe ratio is quite a lot lower, and that is simply due to the lower CAGR here and some higher volatility. However, we can see that the Sortino ratio is higher. That is 2.14 compared to 1.91 with Bitcoin, and that shows us that a lot of this volatility is not downside volatility. It is actually upside volatility, which we do like. So the volatility number here is a bit skewed here. What I'm looking at is the Sortino ratio, and this one is actually higher. We can see that the max drawdown is only around 50% compared to Bitcoin's 83%. So that is a lot better, and 50% is almost at a point where I think I could stomach it. Still, 50% is a lot. However, if you wanted to say that you could live with 83% here, you could just use some leverage and say, all right, I'm putting 1.5, 1.6 in leverage to get up to the benchmark here. And in that case, you would actually beat the benchmark here also, because you had to multiply this by, for instance, 1.6. We would be above the benchmark. So you could say that this one actually beats Bitcoin. It is more diversified, and you are getting a better Sortino ratio. We can see down here on the numbers, we have 40.5% winners, 59.5% losers, but the winners are 42% and the losers are only 16%. So that is a reward to risk here at 2.55, which is absolutely outstanding. So it is a bit of it's a question of what you really want from a strategy. Just buying and holding Bitcoin is hardly what is called a strategy. The other one here is a lot more rules based, and to be honest, we would need some more years to measure this, because who knows if Bitcoin crashes from this level and really goes down and our diversified portfolio just goes sideways or a bit up. It might be that in 1, 2 or 3 years that this strategy will have beaten Bitcoin. So 5 years, it is a bit of a short time frame. It was just actually to test if just a basic core momentum strategy could beat one of the best performing investment instruments, investment assets of all time. And we can at least do something of the same as Bitcoin, but with less volatility. Now let's have a quick look, just for the sake of it, on the weekly on the weekly strategy here. And as you can see, this one actually beats Bitcoin. We are making 106.3% per year in CAGR compared to the benchmark here. The Sharpe ratio is a bit lower, the Sortino is a bit higher. You can see here, max drawdown of 94%. This is definitely not a strategy that I would choose. We also tested it on the quarterly strategy. That didn't do too well either. So it seems like the monthly reallocation is kind of a sweet spot when doing this. A volatility of 101%, that is crazy high. And basically all of the numbers on the weekly are less good. So what I would go with if I were to choose one of these strategies was definitely the monthly. Can we beat the Bitcoin, and are we even interested in it? Well, I can say for certain that I will not be using this strategy myself. I am not interested in a 50% drawdown. You could say that if you could stomach maybe a 25% drawdown, you could just keep 50% of your money in cash and put 50% of your money into this strategy, and you would be making something like 34%. Still, you had to deduct the trading cost, so it's the question if it is worth it. So, is it possible to beat the Bitcoin? It is a good question. We do not have a definitive answer here, I would say. But if I should choose to try it, I would choose the diversified strategy, since that gives me a lot more security and I would sleep better at night. I hope this was a bit of inspiration to you, and maybe also to where you can use the momentum strategies. It is one of our favorite aspects when investing. We are combining it with a ton of different stuff, and we have some rock solid momentum stock strategies that you can test out for free. There is a 30-day free trial. There is a link to it below. And remember to subscribe to the channel. That's all for now. Take care of yourself and your money out there. Talk to you again soon.